Trend following is a tactical trading strategy that aims to make money in both up and down markets. Trend following models typically use systematic and rules-based approaches. Today's audience requested ETF battle features a triple header between 3 trend following ETFs. So which is the best choice? Find out right after this. I'm Ron DeLegge, and you're watching ETF Battles, an original program that's now in Season 5, and we're glad to have you along with us for the ride. If it's your first time here, welcome aboard. Be sure to hit the like button as well as the subscribe button and join our community. And if you're an old-timer, well, it's great to see you again. We're glad to have you. Also, if you'd like to see a certain ETF contest, if you want us to analyze a specific matchup that's floating around in your head, send me your ETF ticker symbols in the comment section below or on our X feed at ETF Guide. We could do double, triple, and quadruple headers. Also, be sure to visit the description section below this video. We've got links to our judges, so get in touch. We've also got viewer resources as well as links to our program sponsor, Direction. So lots of good stuff down there. Don't miss it. Today's triple header ETF contest was requested by a viewer named Devil's Claw, and it's between TFPN from Blueprint Chesapeake, AHLT from American Beacon, and GMOM from Cambria. Now, these ETF ticker symbols aren't exactly household names, but we're going to drill down and look at these ETFs on today's contest. Those of you interested in trend following strategies, well, pay close attention. Helping us to sort through the clutter is a duo extraordinaire. We've got Shana Sissel with Banrion Capital Management and David Dierking with TheStreet.com. Judges, fantastic to see you again. Thank you for being here.
Good to be back. Good to see you.
It's good to be here. And Devil's Claw loves these alt battles, so thank you.
Yes, I forgot to mention, he specifically requested the Queen of Alts be one of the judges. So that just is the reason why we had to have you on, Shana. So
he might be my favorite viewer. He's done a couple of really good alt battles. And so thank you, Devil's Claw.
Yes, we're appreciative of those excellent battle suggestions. Our 4 battle categories are going to be cost, exposure, strategy, performance, and then mystery. Of course, the mystery categories where our judges can surprise us with a key factor or thing that they think is crucial to today's contest. Our judges can also nominate wildcard ETFs if they feel there's better choices elsewhere, or they can opt for split decisions. I've got the scorekeeping duties, and at the end of the program, we will declare an overall winner. Keep in mind, none of the battle outcomes on this program are ever predetermined or known in advance by myself or our judges. To kick things off, let's begin with the first category, cost. Shana, please get us started.
So this is really interesting because these 3 funds are all on the higher side expense-wise, which is what you would expect for alternative strategies. The nature of these strategies they are more expensive to execute. So all of these funds have higher expense ratios than we normally discuss when we talk ETFs. The lowest expense ratio is AHLT, the American Beacon Fund, at 95 basis points. And while it has the smallest asset base at only 39.7 million, it's the smallest fund. It actually has the tightest spreads. And when you look at why that is, I think, in my opinion, it has to do with the underlying investments of the strategy. So you would think that one of the other 2 would have tighter spreads because they're larger funds and more liquidity. But when you look under the hood of what those products own, especially the Cambria fund, GMOM, those funds are not investing in quite as liquid assets. So the AHLT fund is using strictly derivatives and future contracts, forwards, things of that nature, highly liquid, extremely easy to trade instruments. GMOM is actually an ETF of ETFs, and many of the underlying ETFs are small and very illiquid. So that doesn't help tradability of that particular security. And then TFPN, that product is has some underlying funds like mutual funds and things of that nature under it as well. It has a lot of derivatives and futures like the American Beacon Fund, but because it has kind of that combination, it actually has the worst spread I have ever seen in all of the years I've been on this show. It's remarkably illiquid. So of the three, AHLT is my winner because it has the lowest expense ratio and the tightest spread for trading, despite the fact that it is the smallest fund in terms of assets.
Solid start. Thank you, Shana. Dave, you're up next. How do you see it when it comes to cost?
Yeah, I see it pretty much the same way. Shana pretty much laid out every point that I was going to make here. AHLT wins on expense ratio. AHLT wins on spreads as well. Like she mentioned, very thinly traded, so spreads are going to be probably naturally higher on this fund. But yeah, from a total cost basis, I agree. AHLT is the winner.
That takes us next to exposure strategy. This is where we analyze the underlying fund and what it is actually doing and what it holds. So, David, break it down for us. Which of these three ETFs stands out?
Yeah, I'll just piggyback on what Shana said already. She laid out wonderfully how all three of these funds work. I mean, from a high level standpoint, they can go long and short in just about any area of the market they want. The one thing that kind of stood out to me here is that AHLT focuses more on high-level asset classes, S&P 500, Russell 1000, as well as treasuries and some of those things. GMOM gets a little more granular. It does a lot of sector ETFs, so you'll get down to, even things like global healthcare and industrials. And then TFPN, there's a lot of individual long and short positions in stocks in there. So it's actually got over 300 individual positions. So you've got kind of one broad base, one more in the middle, one a little more granular. I like GMOM in this category. I kind of like the middle of the road exposure. Plus, it's got about a 5% position in Bitcoin right now as of its current iteration. So you get into digital currencies a little more there as well. So I'm going to go with GMOM as my winner in this one.
Thank you, Dave. That takes us next to Shana. Shana, break it down for us on exposure strategy. How do you see it?
So I'm going to put on my Queen of ALTS crown, and I'm going to approach these like hedge funds, because that's kind of what they are. They're hedge fund strategies and ETF wrappers. I'll start with AHLT. This is an American Beacon fund. And fun fact about American Beacon, the history of American Beacon is really interesting. It started as American Airlines pension manager and has become what it is today. But it's really serves and treats its funds like when I worked at Mercer or when I worked at Russell, and we were fund of funds and everything was sub-advised. They don't actually manage assets. So they hire sub-advisors. In this case, this product is sub-advised by Man AHL, which is one of the largest and most well-known and well-respected global macro hedge fund managers in the world. Systematic Trend Quant shop in London. It's massive. And so that this fund is sub-advised by that. It takes a very traditional global macro approach, as was pointed out by Dave, high level. It's looking at trends in interest rates, currencies, commodities, broad indices, and using futures, forwards, and other derivative products to kind of take advantage of exposures there. It goes long and short. And it's very much a traditional global macro strategy that hedge funds use. And it's being managed by the folks who manage the Man AHL Global Macro and Systematic Trend hedge funds. So it's got a very experienced team. And even though it has a short track record, like that's something to keep in mind. It's a very much a trend following on the broader macro aspects and goes long and short. GMOM, on the other hand, is a completely different animal. In fact, I would say it's not even a global macro. Where AHLT and TFPN are managed by folks who have histories as CTAs and CPOs, commodity trade advisors, and commodity pool operators. I'm trying to remember that off the top of my head. They are registered. That's what they do. They're basically managed futures CTAs kind of things, right? GMOM is nothing like that. GMOM is a trend following, almost like asset allocation alternative to 60/40. It does not short anything. When it doesn't have a good uptrend in any of its signals, it goes to cash. It doesn't go short. And it uses ETFs to gain the exposure. So it's trading like when I would run a tactical fund and an asset allocation where I would take tactical bets on a long only basis. But it's like small cap. It's the Vanguard small cap fund. And yeah, it has some Bitcoin in there, but it's very much about, more traditional trends. And it's serving to kind of try to be that alternative to a traditional balanced portfolio. It's not global macro. And I would argue, when I think of it from the alternatives perspective, it's really not a global macro managed futures trend following strategy in the sense of how I would look at it as a diversifier. And when you look at TFPN, again, this is a traditional commodities operator. It goes long short, and it more broadly gets in the granular aspects of picking individual securities, which is a little bit different than a traditional global macro. So, they all have something a little bit different about them. But I would say one of these things is not like the other, and that's GMOM. And to me, GMOM's really a tactical allocation alternative to a balanced fund, where the other two are diversifying alternative CTA managed future global macro in the hedge fund sense. So for me, the winner of the three is AHLT because of the pedigree of the underlying team. I feel really confident in Man AHL. And, in terms of the diversifying aspects of the strategy, when you look at correlations and things of that nature, that one's the one that's the most diversifying against traditional asset classes. We can get into performance later, but in this exposure strategy, it is the most diversifying, the purest play in terms of getting that diversified alternative exposure in a portfolio.
Well, that was some pretty robust analysis. Thank you very much, Shana. That takes us next to performance. And some of these funds, of course, are newer, so the performance history will be limited. But Shana, give us your analysis. Which of these three ETFs stands out?
So I don't really like any of them. I'm going to kind of throw a wild card in here. If I was going to look at these three strategies, I'd be looking at them as a systematic trend, global macro, CTA managed futures kind of diversifier. That immediately throws GMOM out because it doesn't fit that bill. It's good on its own merits for other reasons, but in this battle, it just doesn't belong. The other two are not the best macro strategies. So I'm going to throw two tickers out for you that are better doing the same thing and have substantially better performance. And that is CTA, which is the Simplify Managed Futures strategy. And I'm going to throw one that you've probably never heard of in your life. And when you look at it, you're going to thank me. And that is the Strategas Global Macro Strategy. That's SAMT. That fund is not very large, 86.7 million in AUM, but performance-wise and diversification benefits and kind of execution of the strategy, it stands head and shoulders over anything else that I've seen in this space. So I have a wild card winner in this category. It's SAMT, with CTA a close second. Both of those funds blow these three funds out of the water in performance.
Dave, you're up next for performance. Give us your analysis.
This is incredible. I'm getting a master class in these strategies today. I'm learning as much as anybody, I think, but I'm just going to stick with these three funds. You already mentioned that there's not much of a history on either TFPN or AHLT. So AHLT is down 7% since its inception a little over a year ago. TFPN's up 4%. GMOM's up about 13% over the same time period. So it's been a better performer strictly of these three. And it's since inception, GMOM's since inception return in 2014 is about 4% a year. So like Shana mentioned, the performance isn't terrific in any of these, but within these three specifically, I'll go with GMOM as the winner.
I just want to point out that SAMT's 1 year number, as Dave pointed out, the 1 year number for GMOM is the best at almost 13%. The 1 year number for SAMT, you ready for this?
We're sitting down.
34%.
Pretty good return.
So I'm just saying, it's head and shoulders blows the other ones out of the water, in my opinion.
All right. Well, thank you for those added details. That takes us next to the mystery battle category. And this is where our judges can give us that certain factor or thing that they think is important to today's contest. So, Dave, give us your mystery battle category. What is it and which of these ETFs stands out?
Yeah, I took a look at volatility and correlation between some of the major asset classes because managed futures, the real selling point is that it doesn't behave like any other asset class. So it's a real good risk hedge, can be a real volatility reducer. Looking at the correlations to large cap stocks, GMOM is at 0.73, AHLT and TFPN are much lower. I would attribute that to GMOM basically tilting a little more towards stocks over its recent past. Since the S&P 500 has been one of the best performing indexes out there, I suppose it's been a good thing that it's been correlated to stocks, and that's attributed to some of the better performance compared to these other funds. But around the long term, this correlation to stocks has been about the same for GMOM, and of course that's played very well into its favor. Perhaps not on a relative basis, but at least among these three it has. So I'm going to go with GMOM as the winner. Even though it has the higher correlation, it is less risky over the past year or so, which I think is kind of the point of some of these funds. So I'll give GMOM the narrow win again.
Shana, you're up next. What is your mystery battle category and which of these three ETFs wins it?
So I actually took a similar approach to Dave. I did correlations and volatility. I will say for me, I'm kind of torn between GMOM and TFPN for different reasons. As Dave pointed out, GMOM is really more equity beta. It's attempting, again, to provide 60-40 kind of alternative to a balanced portfolio. It's a tactical allocation fund. It's traditional. Doesn't have a lot of alts in there. It's a ETFs. It doesn't go long short. And it's just making tactical bets based on upward trends and momentum signals. But it's ETFs and it's traditional asset classes, small cap, large cap. It gets to the sector level and things of that nature. And it has a higher correlation to equities as you would expect. But it has a relatively attractive volatility score. So it has a significantly reduced volatility versus traditional equities, despite having such high correlation. So when I think about why I would use something like this, right, I'm looking to get a better risk return profile than, traditional 100% equities, and this fund delivers. And then when I think about from an alternatives perspective, it's not an alt though. It's not something I would use in an alts bucket. It's not a diversifier. So then that's what gets me to TFPN. That fund is better performing than AHLT. But the thing that really turns me off of AHLT, in addition to the fact it has the worst performance of the three, is it has a higher volatility score than the S&P 500, which is exactly not what you want, right? From a risk return perspective, you got worse returns and higher vol. That is not what you're looking to achieve here. Whereas if you look at TFPN, you get similar diversification benefits, has a very similar correlation profile against both equities and fixed income as AHLT, but it has the lowest volatility score, compared to the others. It's right around the same as GMOM. So diversification benefits there and, equity exposure and better risk adjusted returns with GMOM. So it really depends on what you're looking to do, but it's really hard for me to choose between the two. So I am going to call it a tie.
Well, thank you very much, Shana. And this takes us to the part of the program where our judges can give us their overall winner. So how will this go down? We've had 2 wild cards and lots of robust analysis breaking down all of these 3 ETFs and their sophisticated strategies. So Shana, give us your overall winner.
My wild card is my winner, SAMT. I will freely admit I didn't pull the correlation number of this fund before I got on the program, so I can't throw that number out to you. But knowing the underlying strategy is global macro-oriented, it's run by the folks at Strategas. If you're not familiar with Strategas, they're really known for their research. In my opinion, the best research on the street. I love Jason Trennert, Dan Clifton. You probably see him all the time on, CNBC talking about policy, and having that kind of insightful, really strong research background for trend following, is important. And again, it's not really as systematic as the strategies we're talking about, but it is trend following. It is global macro. It does offer that diversification. The active aspect of it and the subjective nature of being able to leverage the high quality insights of the research team at Strategas is really what makes it stand out. Its performance is phenomenal. It was launched in 2022. Its 1 year number is 34%. 3 months, it's up over 13. And just in the last month, it's up over 10. So, for me, that is a strategy that stands out to me. It also has a lower expense ratio than all the ones in this battle at 65 basis points, a tighter spread than anybody in this battle. On a million different fronts, it is my choice if I want to get this trend following macro exposure. And so for me, it's SAMT, which is the Strategas Global Macro Fund.
Dave, your final chance to weigh in with your overall winner. Give it to us.
Well, if I was smart, I'd just say I agree with everything that Shana said and just call it a day here. But I'll take a swing anyways. Between these three funds, I went with GMOM as my winner just because I liked some of the lower volatility that came with the fund, even though it has the higher allocation to equities. So it would perform about how you would expect it to, given the markets over the last few years. But I like some of the sector targeting in there and kind of how it goes about that. And within these three funds, it's had modestly better performance, although obviously not as strong a performance as some other funds out of this specific battle. So within this three, I'll go with GMOM as my winner.
Well, our judges have spoken, and according to our final battle scorecard, today's winner is a split decision between GMOM and SAMT, which was offered up as a wild card. Boy, this was a very, very good battle. And of course, each of our judges made their points. GMOM, as Dave pointed out, is the one that had modestly better performance versus the other two in this contest. It's also an ETF of ETFs. It can go to cash, doesn't go long short, but it has that flexibility of raising cash if it needs to. And as pointed out, it's more of a tactical allocation fund than per se a strictly trend following alt strategy. And kind of look at it as an alternative to 60-40 portfolio mix. And as Shana pointed out, her wildcard choice, SAMT from Strategas, which was launched in 2022, was her favorite choice. It had a great performance, historical performance. It's also got a lower expense ratio than any of the ETFs in this particular headliner. And also a global macro approach with active management that has so far delivered. So a strong wildcard choice there for those of you looking for alts exposure in your portfolio. And as pointed out by both of our judges, you really want something that's different when you're looking for adding this to your overall portfolio, something that's different than the rest of your portfolio. So you're looking for a diversifier. And I think what our judges brought on today's program was outstanding analysis. As usual, judges, we couldn't have done it without you. Great job.
Thank you so much, Ron. I really appreciate you having me. And again, thanks, Devil's Claw, for requesting me. I love that you like my alternatives takes.
Yeah, thanks, guys. Good to see you.
Well, do you have a good matchup in mind? Well, send it to us. You could do that in the comment section below with your ETF ticker symbols or on our X feed at ETF Guide. And again, thanks, Devil's Claw, for that excellent ETF battle suggestion. And I'm Ron DeLegge. Thanks for watching ETF Battles. We'll see you on the next episode.